Good afternoon. Welcome to Iron Insight Live. I'm your host, Ricardo Estrada, and joining me today we have Tamar Esner, who's a senior energy analyst for Nasdaq IR Solutions. Tamar, thanks so much for joining us.
Thanks for having me.
Of course, it's been a while since you've been back. So today we want to talk about earnings. As we near the earnings cycle, what are some of the trends that you and your team have observed over the last couple months?
Two big trends. The first is that most energy stocks were down when they reported their results. The key reason being is that most companies were increasing their level of spending, but at the same time they were not meaningfully increasing their level of production growth. So essentially they were spending a lot more but not necessarily getting a lot more. So investors were disappointed about that. I think the second key takeaway from earnings is that investors are no longer going to underwrite a very high multiple for energy stocks simply as a way to get exposure to high oil prices. Investors are saying we really want to see capital efficient growth regardless of the commodity price. And increasingly, I think we're going to see a bifurcation in the market between those that have that capital efficient growth and those that don't have it.
And there's a lot of things happening from a geopolitical perspective.
Yes.
What's happening with commodity prices at the moment?
So oil prices have been down for 6 consecutive weeks. It's been a terrible market. Oil prices are down over 3% today, so we might have a 7th week of losses. Two big stories in the market. The first is the question about Iran and the imminency of loss of barrels when the sanctions go into place on oil in November. So we could potentially lose over 1 million barrels a day from the market. That would be very bullish for prices. But the problem is the second story in the market, which is trade wars. And so that really has the potential to curtail economic activity and as a result curtail demand for oil. It's been played out with the dollar being really strengthened. That's really where we've seen the playground for this trade war. And with oil being priced in dollars, the fact that the U.S. dollar has strengthened over 3% year to date, that's pressured oil prices in the short term.
Got it. Well, it'd be interesting to see how it evolves over the next couple of weeks and into the
Absolutely.
next couple of months, really. So my final question for you is, as earnings season kind of wraps up, what should IR professionals be thinking about over the next couple months and really into the end of the year?
Well, hopefully they can take some time off and relax and regroup. It was certainly a very brutal earnings season in the energy space. For some, there'll be no rest for the weary. So we've got the Heikkinen Energy Conference this week, the Enercom Conference in Denver next week, and then right after Labor Day, we have got the Barclays Energy Conference in New York. But I think the message from investors was clear, and investors were saying, regardless of what the commodity price looks like, even if it's strong, we want to see capital efficient growth. We want to see free cash flow generation. So I think that the message is very clear, and what IR professionals should look at is their own strategy with management and how to make sure that their strategy is being well portrayed in their slide decks.
Great. So I think that was it. Thanks so much again for joining us today.
Thanks for having me.
That was Tamar Esner, Senior Energy Analyst for Nasdaq IR Solutions. If you have any questions or are interested in any of the insights that Tamar and her team provide on a daily basis, please visit business.nasdaq.com. Thanks again and see you next time.